Hello and welcome to our virtual coffee talk, an update on the tax reform roller coaster. Before our webinar begins today, I would like to go over a few housekeeping items. In case you do not know, you can earn 1 CPE credit by attending our presentation today. To receive the credit, you must stay connected to the webinar for the entire presentation and participate by responding to at least 3 of our interactive questions. You will receive an email within 2 to 4 business days with instructions on how to access your CPE certificate. We also invite you to complete the course evaluation that will occur at the end of the webinar. We appreciate any feedback that you give us. I will now pass it over to our host, Kevin Jacobs.
Great, thank you. I'm really excited. This is our actual 16th virtual coffee talk, in which we're going to be talking about an update on tax reform roller coaster. As always, after our substantive presentation, Kevin DeYoung from Wolters Kluwer is going to show us everything we need to know about Answer Connect. But joining me today, super excited about this, is Ellie Collins, who's tax counsel at the House Ways and Means Committee. Ellie, if you want to introduce yourself, I'm sure you have the traditional disclaimer that everyone will be used to.
Yeah, so I'm Ellie Collins. I work for the Ways and Means Republicans, but most importantly, everything I say here are my own opinions and thoughts and are not to be attributed to the committee or Ranking Member Brady or any member or anyone else. So these are purely my own views and thoughts, but I'm excited to be here.
Yeah, and we're excited to have you. And as you can see on the agenda, it's really a broad spectrum of things that we're hoping to discuss today. First, we're going to obviously talk about what's the latest and greatest on the Democrats' proposals as far as, everyone is watching the news. Everyone is hanging on their edge of their seats as to this really has been a roller coaster of sort. It's been going on for 2+ years, and really where things stand. From there, we're going to start discussing some of the OECD proposals, touching on Pillar 1 and Pillar 2. Then talking about, okay, is there a tax extenders package in our future? Something that we haven't seen in a while, but it may be coming through. And then the question becomes, what is the timing of that? Do we think that it might be before or after the year, as sometimes tax extenders might be retroactive? And then we're going to sort of round out the presentation talking about what the Republicans' post-midterm elections agenda might be. And then as a sneak peek, if we have the time, we'll possibly talk on regulatory authority, which has also been something that's been in the news lately. And it's really interesting when you start thinking about the approaches that the Democrats have taken in BBBA, as opposed to how TCJA was when it ultimately passed. So let's talk about how did we get here. We all know 2017, we had TCJA, the Trump administration, the Republicans controlled, everything passed through. Come the next administration, we now have the Democrats in power, right? We've talked about this before. We have Biden at the White House, we have the Democrats controlling the House, but not so fast in the Senate, right? In the Senate, it's a 50-50 split, and that really has amounted to a huge difference on what the Democrats have been able to accomplish. And you can see on the slide really the progression of the Democrats went out full force, right? We were excited to see a Green Book. That's something that we may not have really seen that much of in the prior administration. So at least, from a planners and taxpayer perspective, we're able to say, okay, we might have an idea of what we should expect. As things progress, we start seeing the OECD 2-pillar agreement. We're going to talk about that in a bit, which they have Pillar 1, which is reallocating of taxing rights, and then you have Pillar 2, which imposes a global 15% corporate minimum tax. As that's progressing, we see sort of 2 different bills going on in Congress, right? We have the bipartisan bill, the Bipartisan Infrastructure Bill, referred to as the BIF, and then we have the Build Back Better Act, the BBBA, and they're sort of going hand in hand. One is clearly bipartisan, and thus it's the BIF, and then we have the partisan version, and the BIF goes through, signed to law, but BBBA passes the House, but then ultimately gets stalled in the Senate. In December of last year, Manchin has said, nope, I want to have a slimmed down BBBA. And this really isn't the effect of having a 50-50 Senate, right? It's really giving every senator the power of veto, which is really interesting to sort of say that, right? I mean, we saw that, okay, the Democrats wanted to increase individual tax rates. Well, Senator Sinema said, well, there's no chance I'm ever supporting that. And so tax rate increases sort of had to be taken off the table. Now, who knows how the individual surcharge is not an income tax rate? I still haven't figured that one out, but supposedly she was okay with that. But Manchin still said, okay, I'm not really sure. I want to consider this more. I'm concerned about inflation. I'm concerned about the scoring. Really interestingly, behind the scenes, right, is normally members of Congress look at the scoring that's provided by the CBO. Here, Manchin had sort of indicated that he's looking at other scoring provided by other institutions. And so based off of that scoring, he was like, I still feel uncomfortable. The Democrats need to slim it down. And there's been this back and forth as far as what the Democrats are going to be able to accomplish. Come March, it becomes really interesting because the administration really doubled down, right? In the sense of you have a green book, it's like, what's the legislative proposals? And instead of saying, okay, I acknowledge the reality of what Manchin has said, it starts off with sort of this one-line sentence of, we're going to assume the provisions of the BBBA are enacted as to the extent it impacts the baseline. So in other words, on top of everything that's in the BBBA, which Manchin has said we need to slim down, we're going to add additional tax measures on. And people are like, well, what does this even do? And what's the likelihood of that? And needless to say, we fast forward to July and we say, well, we know what the likelihood of that is. As Manchin is now saying, okay, at least for pre-August, and we're sitting here, right, July 26th, so pre-August is ending really soon. I support lowering prescription drug prices and extending the subsidies, got it. But now we have this September 30th day looming, and you can see the star there, right? And I'm sure, Ellie, you have this date like circled in red, like here's the reconciliation bill deadline. So therefore, I don't have to worry about questions about reconciliation this year unless they do a new budget. I'll turn it to you for some commentary in just a minute, but to highlight, we then have this looming midterm election, which we're going to talk about in the implications, where all 435 House seats are up and 34 Senate seats are up, in which the balance can be shifted either way. And then obviously January 3rd congressional session ends. So that's how we got here. Ellie, obviously everyone here is very interested in hearing your thoughts. And so what are your thoughts on the prospects of a reconciliation bill this session? And do you think it may have tax in it? Any thoughts, any observations?
Well, I think one thing, it's kind of funny, you talk about the roller coaster and keeping up with whatever Joe Manchin's latest thoughts are. And I feel like that's, something we just kind of like look and see what he said this week, right? And try to dissect it, even, which is kind of funny because I feel like he, as someone whose job is to be a technical tax person, he does not speak like a technical tax person, so he'll be like, none of this, and we're like, do you specifically mean provision X? And it's like that's not his specialty, so we're trying to decipher what he is, we're trying to translate into tax what we think it means for us, what he says as someone who's responsible for a lot of different policy areas. But what he specifically said, I thought, was he couldn't support the tax stuff until seeing August inflation numbers, right? So, and then this was kind of like a blame game. And obviously I was not in the room, so I have no idea, but then they kind of suggested it was Schumer who was like, well, if you're not going to, we're waiting to August, then no go altogether. But I just feel like one interesting thing following the Joe Manchin saga, and it goes back to your point of when he wanted the infrastructure bill bipartisan, is he like is that middle of the road guy. Like he seems to want a bipartisan solution. Like that is his preference. So it seems like your more progressive people have been like, well, you know, Joe Manchin needs to just write the bill he wants then, right? And, you know, just tell us what he'll pass and we'll take it. And it seems almost like people aren't listening when he's like, I don't want that at all. You know, like he's, you know, willing to go along with what he can support. And if it has to be reconciliation, you know, he's clearly never shut the door on that avenue for them. But, you know, as a third party observer, but who has been closely observing, he seems pretty clear that that is not his first choice. So it's not going to be him sitting down with a pen writing the bill saying, this is what I can take. It's like, come up with something that I can take. But my preferred route would be a bipartisan one. And that's kind of the group he put together with that infrastructure bill. So that leads, like, what do I think happens between now and September 30th? It seems like they're moving forward with just healthcare, with just kind of the healthcare stuff that he has said that he could support right now. But no, you're right. Like that vehicle is alive until September 30th, and until something is passed or that date comes, you know, we will be a little tense over here, seeing what we're looking at. But it does seem like the momentum is moving toward just a healthcare only bill. But even that, now they're like, you know, with their 50-50 split, people are getting COVID and things, even that, it's just such a tight margin. I think Republicans learned this in 2017, like you don't really have a lot of room for error. And we're operating like in an error full time. So it'll be interesting to see, but the feelings I'm getting is you will, you know, see some sort of healthcare only thing by September.
And we'll touch base in just a minute about everything. You talked about a packed calendar, some of the things that the Democrats are trying to accomplish somehow before at least the congressional session ends, possibly before midterm elections, and then also, you know, following all this and all the health issues between, as you noted, COVID and then other members having surgery or unexpected, and there's really no wiggle room. And as you noted back in TCJA, right, we saw the blue dogs and what's going to happen on the Republicans and can they get enough of a block? There was at least a buffer, right, in the sense of it really wasn't any one person. It was how big is the block that's objecting. So it'll be interesting. Let's turn to our first polling question. This is something that's been in the news and many people have thought about. Obviously, we're just not taking a political stance, but personally, do you believe that tax increases on the wealthy and corporations will help fight inflation? And clearly, many people have said yes, some people have said no. Just make sure you answer it so you can qualify for CPE. While you're doing that, we're going to start talking about some of the proposals from the House passed BBBA. And, you know, we've had a virtual coffee talk in the past about this, and so I won't go into great detail, but thought it would be helpful to sort of set the stage of some of the high points associated with the BBBA. And so in the international space, one of the big things is there's this GILTI effective tax rate, and changing it to 15% and computing it on a jurisdiction by jurisdiction basis. On the corporate side, there's a 15% corporate alternative minimum tax based on book income, as well as a 1% excise tax on the value of stock being redeemed. On the individual side, we have obviously the NIIT, the 3.8%, as well as the surcharge that I previously mentioned. There's a bunch of changes in the 1202, extending 461L, which is the excess business loss deduction. The SALT cap was a big thing, and so I'll be interested in hearing Ellie's thoughts on SALT cap in a bit. But then you can see, okay, 174, and I promise we've gotten a handful of questions in preparation for this that we will be talking 174, so stay tuned. And then you can see green energy credits. The one thing I do want to note, it's really interesting on the alternative minimum tax. When you think about it, there's been several things that have been discussed about it. The first is, oh, well, it's based off of book income. This is such a drastic move from how the tax code currently works? And the answer to that is I say yes and no. And I want to be fair, and Ellie, feel free to chime in and tell me how wrong I get it. But when you look at 451, which are some of the changes that were made as part of TCJA, 451 says, okay, you have to actually recognize income if you're recognizing it for book purposes. That was a big change that was made. And so that sort of moved a little bit, not as far, but it moved the needle a little bit to say, okay, we're looking for greater book tax conformity. Now, that's not to say that this alternative minimum tax makes sense. I'm not expressing an opinion on that whatsoever, but I will note that let's just assume that the Democrats got everything that they wanted in this BBBA. You actually have the potential application of 4 different taxing regimes. You have the regular tax, you have the BEAT tax, then you have the Pillar 2/GILTI, and then on top of that, you now have this proposed AMT tax, and none of them necessarily offset each other, so you're gonna have to consistently calculate things on multiple different methods, which seems rather complex and quite cumbersome. But I guess people are tired already of me talking, so I'm going to ask you, like, are there components of this where you think that there's Republican support, knowing we're going to talk about the OECD in a little bit and 174, but outside of those two, is there anything you can think of that oh yeah, the Republicans can, either in a bipartisan package or, you know, if they take control, we might be seeing again?
You know, I feel like when I think of some of the GILTI changes that were in BBBA, you think of like the rate and country by country as being that's where you're raising money, right? But there were also changes that made it less hard. So like you allowed some loss carry forwards, FTC carry forwards. They got rid of expense allocation. What the one more big one? The FTC haircut went from 20% haircut to 5%. So I think that in that space, GILTI in 2017 was like a whole new, active income CFC regime, and I think that we've done it for 5 years and we've kind of looked at it, and there's probably there are rough edges that were, and those choices were made for one reason or another. But I think that you could see Republicans wanting to revisit, seeing what worked, what didn't work, where, should we smooth some of these edges? I think there were definitely some things in the BBBA GILTI smoothing some of the rough edges that you could imagine people wanting to look at in the future. I think with a lot of the others, they're either right, like your NIT, your stock buybacks, or they're just tax increases on either pass-through businesses or C corps disguised, right? And I think that Republicans already don't like raising taxes, and it's only makes it worse to be raising them in a confusing, convoluted way. So probably unlikely. But I think to your point on the AMT, the book, the differences between 2017 and aligning some things and just doing a full force, let's toss this over to the Financial Standings Accounting Board is that's not where the Constitution put writing taxing rights, right? So I think that's a bigger issue for us. And I kind of feel like the book min tax is a cop-out. If you look at things that drive a company below, whatever percent, you're looking at deferred compensation or R&D or things that full expensing, that if you don't like those things, write one tax code you like and apply it, but it's a backdoor way to kind of get at oh, I don't want to say I'm taking away these things because people like them, and I might even want to say I like them, but this, is a convoluted way to get there. And I guess my opinion is like, right, come up with a code and a bill that you like and stand behind it, but to kind of give with one hand and then take with the other, even the other half of their whole proposal was the green energy credits, and I think their AMT proposal would kick those out. But in theory, like, those are going to drive companies below the headline rate, and that's why you pass them. That's an incentive that you're trying to pass. So it's kind of like, decide either you like your code or not, but instead of layering another code on top of it, why don't you just write the code that you want? I guess that's my opinion.
Yeah, no, and it was interesting, when we were preparing and talking about this, the observation, and I just want to share it, which was, if you looked at TCJA and you looked at the original Biden Green Book proposals, were to strip or reverse out most of the TCJA related provisions. When you look at now the BBBA, as you noted, it's more tinkering on the sides or changing, amending, as opposed to wholesale rewrites. And so, just sort of tease it, that's going to be something that, we'll talk about a little bit as far as like, what are the Republicans thinking going down the road. But it was an interesting observation. I just wanted to make that with this on the slide, with the slide here. And just, really quickly, we talked about, okay, the Democrats want to do a lot of things. Here's a list of just some of them, right? I mean, obviously, with the overturning of Roe v. Wade, abortion rights is something the Democrats have said that they're trying to address. Gun rights has been something that they're trying to address. Inflation, there's always this back and forth as to how do they even address inflation. The January 6th Commission obviously is very politically charged, with some of the Republicans saying, well, once we take control, we're going to have our equivalents of that, investigating, I think, Biden. Judicial positions with McConnell saying, well, it's going to be much harder to get judicial positions filled if we control the Senate. Now, because of the opinion, this wasn't viewed as a pre-opinion issue, but because of the abortion opinion, now same-sex marriage has sort of become a lightning bolt. Obviously, that did pass with bipartisan support in the House, and it's now in the Senate, and it'll be interesting to watch where that happens. Obviously, Ukraine, Russia, and then the USICA Competes Act. Let's really quickly talk about the USICA Competes Act, as there's been a lot of go back and forth on that one, right? And now it really seems like the Senate's going to take, surprise, surprise, a slimmed down, I'm seeing a theme here, a slimmed down bill of the USICA bill, and it's not going to have the desired tax provisions, including like the 174 provision here. What do you see now, once it passes, goes to the House, where do you think it lies? Do you think the House is going to probably pass as is, or do you think they're going to try to sneak in 174? What should we be anticipating here, at least with respect to that?
What's kind of interesting, neither USICA or Competes actually had a tax title when passed in their original form, so it's a slimmed down version, but they did throw in the FABS ITC. Well, I guess, is the latest like understanding. I don't imagine things getting added on the House side, only because, I mean, they had a conference committee that I don't think really achieved much, but like, I think the goal of this exercise, of this slimmed down version, was, maybe the House will just take this up and pass it. Whether or not that happens, I'm not sure, and I'm, not in the whip office on any of the four corners, so I don't know, but I know that, my boss has put out statements that the slimmed down version it's not addressing what's really needed. I mean, if you're trying to, there are 10 sectors that China is very publicly looking to be dominant in, and this only addresses one of them, and it does so in a kind of over the top way. Like for the amount that the bill that they're looking at, you could, I don't have my numbers right in front of me, but I think through 2025, you could get full expensing and 174 and maybe double the R&D tax credit. There's some way that works out, and maybe take on all of those, all 10 areas with American innovation. I don't think, so I know there's some people on our side who are like, this is not needed and not the correct approach. And then you also have some people on the progressive side saying, maybe like these are profitable companies who are going to get all this money. So just hard, that's where we draw the line. We never want to see that either way. So it'll be interesting to me what things look like at the end of the day over here numbers wise. But I'm not super read into that. You know, like I said, I'm not in the whip's office, so I'm not doing the counting, but it is a unique coalition of people who are, you know, kind of not excited about this slimmed down version. So it'll be, I don't anticipate people adding to what the Senate sends over, but I don't also know if it just sails through. But again, I don't know.
Got it. So I'm going to launch the next polling question, and then we're going to keep talking about some of these things. So really quickly, the polling question should be appearing of, should the U.S. adopt Pillar 2? Yes, no, you're not sure what Pillar 2 is. And if not, stay tuned. We'll be talking about it in a minute. But while they're filling out this polling question, there's been a lot of chatter as to whether or not the Republicans would work on any bipartisan measures if the Democrats choose to pass a reconciliation package. Some people saying that it's the red line, that if they do anything reconciliation, that stops. I guess, from what you've seen, from what you've heard, from what you think, of course not, impeding, saying that you're speaking on anyone's behalf, like if they actually go through with the reconciliation, which is the narrow one that you suggested, which would be like healthcare and possibly the ACA subsidies, is that the end of the bipartisanship? I mean, we have seen certain things. So for example, I mentioned in the House, they passed the same-sex marriage. Do you think that that's the end of bipartisan for the rest of Congress? Or do you think it's more, okay, for tax, because they're not gonna have tax in it, there still might be areas? And if so, is there certain areas you could think of that we might anticipate bipartisan bills for the rest of the session?
Yeah, I think and like I sit in my little tax suite, so that's, for me, if they're not doing tax on their partisan basis, that seems to take some, leave oxygen in the room to talk about other tax legislation. And I don't know what my like healthcare friends are thinking, but I do think that without a big tax bill, that kind of calms our nerves a little bit. So I could imagine something at the end of the year. I think that what it would look like, this is like, I feel like end of the year is always a goofy experience because you truly just don't know until all pins are down, everyone's agreed, four corners have agreed, leadership's agreed, it's a go, right? I mean, I worked on the one in 2020 and we even thought that's where we were. And then the president was like, I'm not signing this. And it was like, oh, are we done yet? I still, can I enjoy Christmas? I'm not sure. But I think that our team has worked closely with Neil's team, and they the members marked up the retirement bill and reported that out. And I think the Senate side is working pretty, that's a space that everyone would like to do more on. So you could see that looking for a vehicle. And then you also have some pretty big expiring provisions at the end of this year that, 174, as we've said, but also the 163J EBITDA limitation, full expensing starts to phase down, that I think are big enough that will pique some serious interest. And obviously the Dems have all of their ARPA stuff that kind of expired, and then your traditional energy extenders, stuff in that space. So it's hard to comment on what it could look like within those things, because I've witnessed, I feel like what they did in 2020 was pretty substantial, and then I've also witnessed 2019, and I witnessed years where nothing came together at all. So it's hard to say, but I think all those things would be in the mix and would be talked about, right? I think you kind of start out talking about everything, and then you get to a point where you're like, okay, actually, here's the small universe of what we can do. But as long as reconciliation and a potential tax package is out there, no one can even start. It's kind of not possible to really talk about anything. So it's hard to foresee what what that could look like if anything shook out, but you could imagine both extremes.
Yeah, and it's really interesting, right? Because when I was at the service, I was there when TCJA came out. So you're talking about, can you enjoy Christmas? I won't tell you what it did for our holidays when it finally passed, and some of the provisions were immediately effective. But I can also tell you at the service, right? When you get a letter with all 4 lead people, which are both the majority and minorities on the tax writing committees, a letter from them, which they refer to sometimes as the 4 horsemen. You get a letter from them saying, this is what we really think you should be doing. That carries a lot of weight. And so finally, when they all agree on something on the tax extenders, it takes a lot, but it gets there. Being mindful of the time, turning to OECD, it's really interesting, right? Pillar 1 has sort of been in the news, but not really in the news. And what I mean by that is it's a wait and see approach, right? Pillar 1 reallocates taxing rights. It affects large, highly profitable multinationals. And what happens is those entities' residual profit, which is referred to as amount A, is subject to tax based on nexus and revenue sourcing rules. So while you think it might be taxed in one jurisdiction, it might be actually taxed in another. From a status perspective, there's an integrated public consultation document that was released this month. And then there's plans to what they call is stabilize the amount in October with a complete multilateral convention during the first half of 2023. So that really suggests, they're planning to delay the implementation until 2024. One of the interesting things that has been noted about this is several people in the administration have suggested, well, if Pillar 1 is implemented, it will have a net neutral revenue implication on the US, which is sort of interesting. I'm not going to steal your thunder, but I know we talked about, okay, we're reallocating taxes and net neutrality. So I'll turn it to you, Ellie. What insights can you provide, if any, on Pillar 1 and thoughts?
Yeah, I think right now, like everyone, there's just information we don't have, right? And we don't know what it would do to the US fisc. We don't know the final answer, like what percentage of this reallocated amount is like US multinational allocation, whether or not it's currently booked here, like if it's booked somewhere lower tax, but just generally, like how much of this is a hit to the US fisc and how much of this is a hit to the US companies. And I think that's something that, we'll definitely be looking at. I think it's also kind of interesting, your point that, we've heard it should be net neutral, maybe a little bit positive. I guess I feel like we have a few roles around here, but one, I think if Congress has a fiduciary duty to like the United States people, right? It's taxpayers. So how do you sign up for if the answer is not positive or neutral for the United States, if it's negative, how do you cede taxing authority away? I don't know. How do you take that vote? That seems tough from where I sit. But then on the other side of that, if it is truly neutral or a little positive for the United States, the idea that this was supposed to replace digital service taxes, you get developing countries on board because they think they're going to get a little bit bigger cut of the pie. Like that's, maybe they'll have less aggressive, tax administration. If we're made whole, then are people okay with that? Like these other, you know, I feel like your digital service taxes were targeted at US companies, kind of like, let's get the Americans. And I think some of these aggressive auditing regimes are like, okay, let's really try to squeeze a little more out of these big US companies. If the United States is fine, or is whatever pillar one a sustainable, you know, political agreement? Like just, and if it is, that, you know, that's kind of hard to imagine. And if it's not, then what is the point of it? Because if it's not, you know, getting some certainty, just it seems to be creating maybe potential new arguments and not really resolving any old ones. So it seems like its path to success is incredibly narrow, if it exists at all, from where I sit looking at it, just because it's like I can argue both sides, and I think they're both, like, I see where the argument is, and it's like, wait a second, well, if neither of these are like super palatable in the end, then what's the end result? But again, we don't really have the information to know, so it's hard to make that call. And perhaps I'm wrong, and what comes out is the like magic unicorn that actually everyone's totally okay with, and you know, it replaces digital service taxes, and the FISC doesn't take ahead. Then, you know, then maybe that's something that has a path forward.
Well, I'm sure the magical unicorn is definitely what we've seen on Pillar 2, right? So I'm just kidding, don't worry. So on Pillar 2, right, everyone, we've talked about this before, so I won't go into much detail except turning it over to you, which is, right, it's a complex tax regime. The goal is designed to have this 15%. You'll hear terms like IIR and UTPR, and then you can have, why not throw in another acronym of a QDMTT, which is a qualified domestic minimum top-up tax. And, you know, ultimately the goal is to ensure, the stated goal is to ensure that income is subject to a 15% global minimum tax. It's designed to sort of eliminate entity location jurisdiction shopping. Now, several jurisdictions have targeted saying possibly 2024 instead of 2023, so it gets further delayed. Everyone was looking at the EU and saying, okay, well, the EU, Poland's holding things up, and lo and behold, right, the last EU meeting, they dropped their objections, and all of a sudden, really, it caught many people off guard. We now have Hungary saying, I object, right? Before they sort of signed on to it, and now they say, hey, not so fast. And in response, possibly viewed as in response, but many people are speculating in response, the US has now said, well, we are now backing out of our treaty with Hungary. And there's a few things that are of note there, particularly interesting, and I'll be quiet in just a minute, saying that Hungary referred to taking advice from Republicans. That was an interesting thing, especially when you have the Democrats currently in power. You would have thought that maybe they would have said, hey, we're just thinking about things further, but to specifically point to the Republicans. The timing of that, right, they gave notice July 8th, so the 6-month period ends January 8th. So realistically, that means it doesn't have any impact until 2024 because of how the effective dates and the provisions work within the treaty. And so we'll talk more about the Hungary Treaty possibly in another virtual coffee talk. But really, Ellie, where you're seeing, like, thoughts on the US-Hungary situation, thoughts on Pillar 2, where, you know, I know back in January, the Republicans vocalized frustration about the amount of information the administration has shared. Has it gotten better? Where are we? So I'll just, I know I'm giving you a whole bunch of stuff to think about, but what should we be knowing?
Yeah, I think what's kind of interesting on maybe like taking a couple of these together, I think people have underestimated how eager Republicans have been to be engaged on this issue. So when when Hungary objected, they reached out to our members and asked for engagement. And you know, Treasury has not really done that yet, 2 years in. So I think it's interesting. I guess it's hard to understate that our members are interested in being engaged. They just have not been. And I think with the Hungarians, they have similar concerns. I think that Pillar 2, I kind of would say like we should step back and look at what are we trying to solve for here. Because you said the idea is every jurisdiction should be, the income there should be subject to at least 15%. But I don't know if that was always like a kind of a global harmony. It's not really something I think everyone knew they were signing up for in the beginning, and it's actually a result everyone's looking for. I think preventing aggressive jurisdiction shopping, you could get a lot more people on, like both sides are like, yeah, we should prevent the worst of abuses. But I think protecting domestic sovereignty and writing your tax code, those don't have to be mutually exclusive, but kind of have become that in this like OECD view of everyone needs to have the exact regime, exact same regime. And I think that's so like competitiveness, sovereignty, these are kind of shared concerns that Republicans and the Hungarians seem to have. So I think that was kind of a conversation that they were, everyone was interested in having. And I think to the Hungarian treaty point, I think Treasury was pretty clear that they, this was, in a result of them raising a veto at the EU, which kind of makes me wonder, and I feel like I brought this up on Pillar 1, is this stable? If people aren't happy, is this stable? On Pillar 2, if you're having, it was kind of presented to us as like everyone's on board, this is a great thing, that might suggest some stability in years to come. But if you're having to bully with a heavy hand, withdrawing tax treaties just to get the EU on board, a block of countries that you would think, might, be the most likely to be on board, what does that mean for the long-term stability of the rules? And if they're not stable, once again, are we creating just this like entirely complex fourth set of books that everyone has to keep? And it's, it creates new complex challenges and disagreements between countries without solving any old ones. And I think that's something that, maybe like, but with the BBB kind of with reconciliation seemingly off the table for now, but like I said earlier, not until September 30th will I rest perfectly easy. In the EU in a veto state, maybe take a step back and, slight pause and like reevaluate what the goal is, and maybe go back to like strong CFC rules can prevent the worst of abuses, and we don't need everyone to have an identical tax regime. You can still kind of find ways where people are in more cohesive, but without writing each other's rules and preventing the worst of abuses, but kind of realize, pick your battles, and you don't need to make sure every single income stream is taxed at whatever rate the United States wants it to be taxed at, or the French want it to be taxed at, just kind of prevent abuses without prescribing every answer for everybody.
Yeah, no, it's really helpful. Just to circle back to our original polling question, which was, I believe tax increases on the wealthy and corporations will help fight inflation. Interestingly, about 43% of you said yes, the rest said no. So how that reflects the views of the US, as well as, how that impacts Manchin and his thoughts, it'll be interesting. But really quickly, we touched on TCJA, and I'm mindful of the time, so that way we can get to really your insights on post-election. But we've touched on 174. It's been something that's been near and dear to many taxpayers' hearts, right? In the sense of my understanding when TCJA was passed was the Republicans never thought it was going to become in effect. They always thought they would be able to address this at some point before it became effect. Lo and behold, come now 2022, and voila, it's here. And you know, because of that, the Democrats have always been saying, well, we're happy to walk it back, but you know, you use that as a pay for it, so let's unwind what you paid for it with. And the Republicans are, oh no, we just want to wipe out 174. And then you also mentioned, you know, the 163J. You know, I remember when it first passed, it was really interesting because it was right when it first passed. You saw people wearing shirts like "Save the DA," which is, you know, the depreciation and amortization, which why they were starting then, they knew it was coming because, again, many people thought it may not come to fruition until, you know, now, and here we are. You mentioned this is possibility of something in extenders. You know, obviously, I think 174, it seems to me at least, has greater traction than 163J, and I know that, you know, for example, starting next year, we start seeing the phase out of 168K and other provisions. What should we be like, okay, I'm a betting person, I'm gonna bet on what may be in the extenders bill. And again, I'm saying this before you even say anything, which is no one should be taking this as gospel or any inside information. There is no attribution of your comments. I'm doubling down on your disclaimer for you, but if you said, okay, the first thing I think an extenders bill will contain is X, and then the second thing may be Y, like where do you think the hierarchical?
Yeah, so it seems to me 174, like it was included in Build Back Better, right? So that was a DIM only bill, and it was in Republicans' tax reform 2.0 back in 2018, I guess. So that I think seems like everyone's agreed on that policy. So it seems like if anything goes, that should go, has kind of been my like I said, yeah, totally me, not attributable to anyone. It seems like that has the support to go. And then I think, yeah, so that and maybe retirement goes in the kind of like everyone's voted on this, so like why shouldn't it go category. And I think for 174, the timing is pretty interesting. If you look at the score from Build Back Better, if you only do it for 5 years, it doesn't cost as much in the 10-year budget window. So that can be helpful for anyone who's like got a ledger trying to keep up with what's going on. And then this, I feel like my crystal ball is just entirely murky. I think of like my corner, right? That's the, you know, where my thoughts are most relevant maybe. Full expensing was a huge House Republican like win in tax reform. And I think that's something that they'll, you know, will push hard to see get done. But also I would say like the PATH Act was kind of the first big negotiation of then Chairman Brady, and that was kind of negotiating kind of the phase out of some industry specific tax incentives. And I think, you know, he kind of felt like that was the right way to wean people off some long-standing industry-specific subsidies. So I feel like that's why things get totally murky, because it's like I have no idea how those things balance out in the end, and I don't have good, you know, a lot of that is what the four corners all want, and I don't have a good view of what that is. But it does seem like if anything has an Internal Revenue Code reference, that 174 should be included.
And we launched the next following question, and in the interest of time, we unfortunately won't get to the reg authority discussion. We could possibly save it for another virtual coffee talk, but I guess in the few minutes, if you could spend like 2 to 3 minutes just telling us post-midterm Republicans agenda. What do you think we should be expecting? Obviously, you know, we had some discussions about many people thinking large-scale tax reform should be like once in a generation. You know, we had 54, 86, TCJA, then BBVA changes that model. Thoughts on the Republicans' view towards tax reform? Anything you could give us with your parting thoughts in the next 2 to 3 minutes would be great.
Yeah, I would say, first of all, like when I hear from our members, everyone is just like laser focused on really kitchen table issues. So I think that hot out the gate, they're going to be worried about Main Street business, you know, people's checkbooks, basically. That's kind of where their heads have been. But my boss has made this statement before that like tax reform, and I think it was again with that 2018 bill, that tax reform should not be a once in a generation event. And I think one thing that's kind of stood out, we mentioned earlier, to me, is that how much of what actually passed the House didn't undo what was done in the 2017 Tax Cuts and Jobs Act, but really was tweaking on the edges, and I feel like a lot of the solid improvements remained. But like to always be evaluating the tax code and making improvements where people agree that improvements can be made. So you don't need to wait 30, 40 years to wholesale redo everything. You should be constantly evaluating where the code is and where it can be improved, both, you know, to make it more efficient, make it simpler, make it more competitive, whatever the needs are, that you don't, you know, that constant reevaluation is not a bad idea.
Great. Well, we greatly appreciate it. We greatly appreciate you joining us, giving some insight into the whirlwind tax reform roller coaster. I'm sure this is far from over. As you know, we'll also see what happens come post-midterm elections, and you know, depending on if the Republicans control one, both, or neither, and what gets through. But with that said, the results of the last poll, just for in case if anyone's interested, 15% said that the Republicans only take the House, 18% say they only take the Senate and not the House, and 49% have said they take both the House and the Senate, with only 18% saying that Democrats continue. With that, Kevin, we talked about a lot, and I know Answer Connect has a whole bunch of stuff that we're going to be able to look at to try to keep track of things. So why don't we turn it over to you so you could show us what we're able to do.
Thank you, Kevin. Yeah, if you wouldn't mind just passing over the ability to show my screen. Thank you. Just can I get a confirmation my screen is being seen, the CCH Answer Connect? Excellent, thank you. Yeah, in the final couple of minutes here, we just wanted to take a little bit of time here to show you a little bit about CCH Answer Connect. CCH Answer Connect has been on the market and available to everyone for the past 4 or 5 years now. And as we developed CCH Answer Connect, the concept here was to take the way research content has been presented and streamline it, really develop a tool that worked into the tax research workflow of all of our different types of users, from those that are newer in the industry, more focused on topical discussions of tax issues, while also allowing those that are more experienced to deal with it at a code base, but tying all of that information back and forth. So we really wanted to spend some time doing on that. We're gonna take a couple minutes here to take a look at CCH Answer Connect. And I think one of the topics I thought we would try doing today was to take a look at that research and development. One of the things we've done, as you can see on CCH Answer Connect here, is begin to populate search results for you from questions and answers. How do you get some of that high level information regarding research and development? Direct links into the topic pages that I had mentioned, that great overview and discussion of the specific issues. And then again, some of those suggested search phrases that we have. For today's demonstration, I'm just actually going to run a keyword search on research and development costs and take a look at a little bit about how we have formatted the research workflow within CCH Answer Connect. And from the search results, as they begin to populate here, we are going to begin our research in a topic page, our research and development. We've heard, the changeover took place January 1st, 2022 with some of the new provisions regarding this. And as we open the topic page, what you'll notice first and foremost is that we give a discussion regarding the pre and the post. So as a researcher, you have the ability to see what it is now, and what the changes were made and some of the requirements that are in place with the new changes. But we also, on this same topic page, give you visibility, as I use the left navigation bar, to take a look at what the provision was pre-2022. And as we look at the navigation bar a little bit further off to the left from a research workflow, left to right, we can go into some additional recommended topics. Do you need additional information? Our editors have said, here's some additional areas you may need to investigate. We wanted to be able to pull forward all of those code sections for you. We do realize that many researchers, while they understand the topics, may not understand the associated code sections. So we wanted to bring that directly to the researchers' visibility and view. We've also included any client letters, smart charts, practice aids. Again, as you walk through the process of tax research, you understand what this now means, but how do you apply it? How do you communicate? How do you take the fact pattern and relate it back into your own circumstances? So again, we've tried to pull all of that information forward and together for you. As we move through the research process, I'm actually going to jump into our code section. And you'll notice we now have, in this case, two specific areas. We have the enacted law, which is the newest one, the post January 1st, 2022, and then the previous. And simply by kicking in the new one, I have visibility to that new code section, any regulations. And as the screen begins to populate, you'll see we've created a tabular structure from left to right, which follows what you will be considered a traditional tax research workflow, the code section, into any relevant regulations that give you further guidance on this information, into the explanations, the CCH guidance. Is there any cases, rulings, administrative guidance that you may need to take a look at as you work through the process of this tax research? And again, more tools. We've wanted to put these here again to finalize that process. But what we've also done within CCH Answer Connect is given you the ability now to go from the federal provision directly into the state in which the transaction could be taking place to find out if that state has adopted. Have they modified? Have they completely decoupled and doing something completely on their own? We wanted to give you as a researcher that ability to take a look at that information. I'm going to hop back to my code section here. And again, just really quickly, if you do need to toggle back, again, without having to run another search or go find the information, we now allow you to toggle back to the pre-January 1st, 2022 changes regarding this specific tax code. So again, just wanted to show you that real quick. As we continue to move through the process, sorry about that, of these new tax bills and will they happen or will they not happen, I wanted to focus on one other item very quickly related to our news. And it's an offering we call our client impact event. This is where we take that news information, and as it becomes enacted, we're going to break it down specifically. And again, just to be consistent with the topic we're looking at here, we're going to take a look at the client impact event as it relates to the research and development. And very similar to what we saw on that topic page, we're going to walk through the researcher and the user, everything relevant to this specific area, the overview of the issue at hand, the planning opportunities, your client profile that's would be impacted by this. Any effective date rules that you need to see are going to be here. We take you to that recommended topic, similar to what we had done on that topic page. We link you directly into that key primary source. Again, working through that research workflow to allow you to gather that additional information. So I want to thank you for the couple of minutes to do this. Would love to spend some additional time with anyone who's interested, taking a deeper dive into CCH Answer Connect and how it can assist you in doing your tax research. And with that, Sharon, I'm going to push it back to you for the final polling question.
Thanks, Kevin. Okay, so the final polling question is, would you like a more in-depth demonstration or further details on the resources and tools available in CC Answer Connect. I'd like to thank Kevin for the fabulous demonstration. And thank you to our panelists, Kevin Jacobs and Ellie Collins, for a great and informative discussion. This will be the final polling question. The question will remain up as we wrap up today's event. Today's virtual coffee talk will conclude once the polling question is completed. As a reminder, there will be also a few survey questions for you to complete following the webinar. For anybody who answered at least 3 of the required polling questions and stayed connected to the entire webcast, you can expect to receive an email within 2 to 4 business days with instructions on how to access your CPE certificate. Please note, the instructions will be sent to the email you used to enroll for today's event. Thank all of you for attending our July virtual coffee talk, and we will leave that question up for another 30 seconds. And this concludes our webinar today. See you next time.